This is how you SPY-T trade level 1 profitably. The other day, I posted this in the SPY Tomorrow membership area, updating the best practices for trading SPY-T, specifically level 1. Pause to read. SPY-T trading, it's a process over time, taking advantage of this, the overnight gap, and turning into that, a profitable portfolio. Head on over to spytomorrow.com to check out the free simulation tool to see if SPY-T trading just might work for you. Although SPY Tomorrow's signal is closer to 70-75% correct, we only need to be about 55% correct over time. Take a look at this chart. What this chart is showing is that in 1993, when SPY, the ETF representing the S&P 500, started in 1993, if you had bought in the morning and sold at the end of the trading day, well, you would have maybe made or lost a little bit of money, most likely have just ended up flat. However, if you had bought SPY at the end of the trading day and sold it in the morning, well, you would be up over 1,000%. The catch is, in that example, is that you would only make money if the market went up, and the market went up over that period of time about 54% of the time. So if you're right about 55% of the time or 60% of the time and enhance that with options, well, you can see the graph for yourself. Of course, when I started working on SPY Tomorrow, I saw that overnight gap and wondered, well, can we take advantage of this opportunity? There's a much bigger move quite often overnight than there are minute by minute. And obviously, watching the market minute by minute can just drive you crazy. So what if there was a way to tell which direction the market might open the next day? Take advantage of that, and you have something going. And of course, they said, it's impossible. And I have to concede there were times that I thought they may be right. However, after 3.5 years of hard work testing wins and failures, we got it right with the purple algorithm. And it's still going strong over a year later. So do these algorithms predict the future? Absolutely not. They measure what we refer to as the pressure at the end of the trading day, which often correlates to how the market might open the next day. However, there are many things that could happen overnight, such as earnings or government reports or just an overall change of mood in the market. So we have to protect ourselves. So at the very end of the trading day, we check our indicator, either up or down, and then we buy calls or puts at the very, very last seconds of the trading day. However, we want to protect ourselves in case the mood of the market shifts overnight. And so that's why we will use ratio trades. A ratio trade means we buy a ratio of calls to puts or puts to calls, depending on whether our indicator said up or down. If our indicator said up, we might buy 2 calls to 1 put. That's a 2-to-1 ratio. You can also base it off of the premium. A 2-to-1 call to put ratio might be a $2 call and a $1 put. But you can also have ratios of 3-to-1, 4-to-1, 5-to-1, and so forth, depending on how aggressive or conservative you might want to be. The most conservative approaches to SPY-T trading are the SPY-T A trade, which is 1-to-1, and the SPY-T B trade, which is 2-to-1. However, I would stay away from those if your ETF or stock has a volatility IV of less than 20. They really just don't work very well in those environments. So if you're in a low volatility environment, just consider small directional trades or a minimum of a 3-to-1 options ratio. I feel one of the biggest advantages of SPY-T trading over day trading is the ability to get some of that emotion out of your trades, because emotion is what sinks most day traders. Now, some day traders have nerves of steel, but that's only about 5-10% of them who actually win consistently. And the best way to keep the emotion out of your SPY-T trading is to focus on level 1 trading, which basically means you're doing the exact same thing every single day. You buy at the end of the trading day and you automatically sell in the morning. And what I mean by automatically sell is that once you buy your positions, you immediately set them up to sell the next morning. It could be right at the open of the market, or it could be at 10 o'clock, 10:30, 11, 12 o'clock. It's best to kind of look at the trends and see where might be the best place on average to sell your specific stock or ETF option. Here's the thing, that timed exit will not always be perfect. Much of the time, it will not be the perfect time to exit. But what it is doing is preventing you from chasing that perfect time, because that is when we get in trouble, when we double down, get in and out of the market when we should have just stayed out. That timed exit on average is going to work better because our emotions aren't taking our account. Now, if you feel like you need to adjust the time based on the trends, there's nothing wrong with that, but don't do it upon your exit the next morning. Take a look at the data, and then if your exit is set for 10 o'clock each day and it looks like 11 o'clock will be better in the future, well then switch it to the 11 o'clock exit moving forward. For SPY-T level 1 trading, not only should your exit time in the morning be consistent, so should your stocks or ETFs or leveraged ETFs or options be consistent each trade every single day. If you're trading options, you may want to be more conservative with a SPY or be a little more aggressive with QQQ or IWM, or perhaps a stock such as Apple, Tesla, or Google. It is totally up to you, but trade the same thing every day. And if you're trading options, consider the expiration. If you're more aggressive, it might be 4 to 7 days out to expiration. If you're more conservative, it might be 15, 20, or 30 days out. And just let the process work. Level 1 does take discipline because many of us, we like to watch the market in the morning and see how the market is doing maybe after we get up while we're drinking our coffee. But the thing is, that's when the emotions start to build up. And if things aren't going perfectly, you want to do something about it. That's why I recommend, for the most part, just wait until the end of the trading day to see what happened. And then take a look at your indicator and do what you need to do to buy your positions at the end of the trading day. Just let the process work over time. You're not a winner or a loser just based off of 1 or 2 or 3 days. We're going to have streaks where we only get 1 right during a week, and there'll be other weeks and we get all 5 right. But the thing is, if your indicator is 60, 65, or 70% correct, well, that still means that it's wrong 30, 35, or 40% of the time. And you have to expect it. And you have to put those emotions in check. SPY-T level 1 trading expects that you make the same trade every single day. That includes your ratio trades, or maybe a very small directional trade, maybe 3% or 5%. If you're really aggressive, 10% or more. And if you're going to do a ratio trade, every trade would be 2 to 1, 3 to 1, 4 to 1. I would definitely stick with 3 to 1. That way, if the market volatility goes down, you'll still be in good shape. There are 5 levels to SPY-T trading, and I do have a video on all 5. I recommend you check that one out. However, the levels have nothing really to do with how good of a trader you are. It more has to do with how consistent and how many decisions you want to make when you buy and exit your trade. So level 5 would be like exiting as a day trader, where level 2, 3, and 4 will gradually get you to that point, but giving you more options to consider before you place your position at the end of the trading day. Just like any aggressive day trading or swing trading strategy, there are winning streaks and there are losing streaks. However, we do have 3 advantages. 1, that powerful algorithm at spytomorrow.com giving us guidance as to whether to point up or down. We also have the ability to take a lot of the emotion out of our trading, which often kills many day traders or even swing traders when they're more hands-on. And lastly, time. Let the math be at your advantage. Let the math work in your favor to grow your portfolio over time. And I'll see you in the next video.